Let's bring him in. No, it's not Dr. Seuss, folks. It's someone better. Federated Hermes CIO, Stephen Auth. Stephen, I love the title of all your reports, but this one really is amazing. Before we get into the report, though, I thought the data altogether was dovish enough and worrisome enough for the Fed to continue to be accommodative.
Yeah, very in line with what we've been thinking. You know, the labor market's clearly soft, especially after you adjust for the $60,000 a month that they're saying were overstated.
Right.
So we're going nowhere on jobs. That's one of their big mandates. Inflation is going to surprise to the downside again, I think, in this week. So, yeah, we think they're on a rate-cutting path. We still have 3 more cuts to go, we would say, before they get to what I would call a neutral stance.
Yeah, and what worries me so much is that the catch-up, the Fed having to catch up, having missed it again or needing clearer data. I mean, it seems like the trend at some point should be pretty crystal clear.
They've just, you know, this Fed has been very much rear-view mirror focused as opposed to like a Greenspan Fed that was kind of forward focused.
Right.
They tend to over-focus on data, not enough on what's going on in the real economy. If you do that, you see that there's a lot of softness.
And none of it's high-frequency data. It's all old stuff that's going to be revised, and it's just old, and it just doesn't matter today. You know, it's just rearview mirror stuff. Let's talk about bubbles. You talked in your piece about some of the great bubbles in recent times, the Nikkei bubble, the South Asian bubble, the tech bubble of the late 90s, real estate bubble. And I think the thing that they all have in common that you bring up is not just about a market meltdown, but there are economic consequences, either from these bubbles bursting or part and parcel.
Yeah, Charles, I mean, I've had the privilege of working through all of these bubbles. And, you know, it's not fun at the time because what happens is it draws in so many investors. We get way over-invested. And then the economic consequences of the crash, and these things all crash spectacularly, 50, 70%. You know, it took a long time to work out.
I remember the Southeast Asian bubble. I had never even heard of the Thai bot, but I learned about it the hard way.
Yeah.
So let's see where we are right now, because you put together a bubble condition monitor. So you've got 3 levels. Green, we're good. Yellow, a little worrisome. And red, you know, Katie barred the door. No red yet.
No red yet. And we wanted to put this together because I was seeing too much stuff out there on bubbles where people are focusing on one aspect of a bubble. And really, when you study the great bubbles of history, there's multiple features and facets working here. So these are 6 of the most common ones. And when you go through them piece by piece, yeah, there could be some capital misallocation. We've got that as yellow. That's one thing that people talk about. But even there, the total spend of the big mega cap companies, it's going to roughly run less than 1% of GDP.
Right.
It's not as high nearly as what we've seen in previous bubbles. We've got that yellow. There's been a couple of cases of fraud so far.
With the credit markets.
Yeah. But other than that, you know, liquidity is not excessive. The Fed's running a tight policy. Most of this overspending, if you want to think it might be, is not through use of debt, use of cash flow.
Right.
We think we're in okay shape.
Also, you're a big believer in this secular bull market, right? And they can last anywhere from 20 to 30 years. You know, and I, by the way, I'm in the same camp as you.
Yeah.
I think this bull market began in March of 2009. And I feel very comfortable that it's going to continue with a few bumps in the road.
Yeah, and you get these only every 30 or 40 years because you got to go through a 15-year bear that scares the daylights out of a generation of investors who remain cautious, and policymakers, by the way, who remain cautious for the rest of their investing lives. And that's what we're in right now. And then usually out of the creative destruction of the bear, you get a new technology that drives the new bull.
So everyone loves value stocks. The question is, what's value? Almost like quality. I have people say, I like quality. I would say, is Apple quality? No, that's not quite. So, you know, it can't be in the eye of the beholder. Certainly, you know, these pure value plays, these aren't, no one would traditionally believe that a stock trading with a 209 PE is a value play.
Right. It used to be that you define value as cheap assets. But nowadays, in asset-light businesses, cheap assets might stay cheap forever. So people have more thought of value. I think the way we think of value is value relative to the growth opportunity coming. And that's where some of these stocks, you know, you could probably define as value. I've got 2 here.
Okay, so you like Train and Amazon. Amazon is interesting, right? Because everyone thinks Mag 7 expensive, but this is a really it's really truly a values play.
It is at this point. It's trading at 19 times cash flow. You're basically getting, you're paying for the AWS cloud business, the AI build out. You're getting the world's probably greatest retailer for free here.
Right. All right. Let's talk about some small cap value plays here as well. You know, so again, you come with these names that I don't think everyone knows Citizens, but Laura Group and Camtech.
Laura Group's playing the aerospace cycle. This is really underappreciated. We love these little companies that build the parts you need to build airplanes, because no airplane manufacturer is going to mess around with a new guy. So, you know, you don't want to take down the whole plane over an airport. So they're playing the build out of the aerospace cycle. We think it's got a lot of growth ahead of it. Camtech, we think, is a very attractive stock.
Real quick, okay, because when I saw this one, I wasn't quite sure. Is this like the ultimate? So this was $10 stock. It went to $1. It's $1.68 right now.
Well,
listen, we're always going for 10 baggers on this show.
Charles, you're looking for small cap value. Here we go. I mean, this company is going to be a 5-bagger. Oh, well, I can't say that.
In your mind, in your opinion.
In my mind,
sure.
we're looking at something that could
What's
be a 5-bagger.
What's the name? It's RZLT.
Resolute. It's a little biotech company. They're in a phase 2 phase. They lost a phase 2 study on one part of their cohort.
Right.
The other part, we're very confident is going to come through.
I love it. That's what we're in here
All right,
the game
Charles.
for. If I get one of those winners, man, I'll be able to hang out with you this next Christmas. Thanks a lot, Stephen.
All right,
Appreciate it.
Charles.